Good morning. Welcome to the Loan Officer Breakfast Club. I had to throw in good morning, y'all, from Texas and wherever you're at. Hey, excited today. We got the one and only Owen Lee with us today, going to be just walking us through markets and updates. But hey, while everybody's coming in, let's do this. Let's warm things up. Drop one win that you had last week in the chat. So just drop in a win, whether it's big, whether it's small. Drop in something that was a win for you this last week in the chat. We'd love to celebrate that with you. You know, one of the things, Carl, we're seeing so much success on Call Stars. And one of the things that I was talking to Kat Terry, I don't know if she's here right now, but Carl, she's already closed 7 loans this month. And it was so interesting. She's like, well, I'm not doing it perfect. And you know what I thought? Business doesn't reward perfection. You know what it rewards? Consistency. And it was like her first start was like, I'm just not doing it perfect. And it's like, Kat, it's not perfection, it's progress. Carl, what's your thought on that?
Yeah, I had an issue with just this morning with Maria's car, and so apparently Mercedes doesn't get it perfect either. But last time I looked, they're doing pretty good. They're doing pretty
They
good,
are.
right? They're doing pretty good, and they get flat tires and dead batteries, and they get them too. So
I love it. Hey, well,
Hey,
listen, we got
we've got
Nicholas.
somebody, Steve,
Some
we've
of the
got somebody trying to get in here who's supposed to be on
Yeah.
vacation. His name is Francis Barrett.
no.
don't let him
What do you
in. Don't
mean,
let him
no?
in.
Too late. He got in with the masses.
Oh my
Oh,
gosh. Hey, well, listen, let's celebrate some of these. Brian Clements said, got a referral from a listing agent on a deal, now pre-approved and looking. It only works all the time. Nicholas got 3 applications. Let's see here. Tim got 2 new referrals from a new realtor. Owen Lee going to hang out with Sarah and Holly Walters and Sue in Dallas was a great time. And hey, Sue Moody, I got a lead from a realtor that participated in my walk and talk. Hey, Sue, talk
Nice.
about that. What is that? A walk and talk with Sue and have a $500,000 loan app out of it. Sue, unmute. Tell us about your walk and talk.
Well, I actually got the idea from Melissa. And when she spoke about her podcast that she does, actually, Kristen said, Sue, this is all you. And so I went with it and I created a walk and talk with Sue. The first one was last week. I have another one actually today. But I just send out an invite to realtors. It basically says, step away from your desk, step away from your phone. Let's take care of ourselves and share wins and tips in the real estate market for our area while getting out and doing some exercise, moving, right? Because we forget to take care of ourselves. We get busy. And so that was kind of my purpose. And it's going okay, some people that have signed up drop out because they got a showing or whatever. And while we were walking, the one realtor that was walking, we were busy and talking, and she reached for her phone and she goes, this is someone who wants to see a house this afternoon. I said, well, take the call because if you don't go show them a house, they're gonna find somebody else too, right?
Yes.
And so she took the call and afterwards she says, you know what? I don't think she's pre-approved yet. I'm gonna have her call you. And that afternoon, she called me, got a loan app, and she has an offer on a house, and it's a $500,000 loan. So
Great job.
So
Hey,
I
and you
want
know
to
what? Go ahead.
I want to jump in just real quick. Sue does this with a purpose. So
Yeah.
if you want to learn more about Sue's story, there will be an upcoming podcast that's dropping for Ladies in Lending to hear about Sue and her story of why she started this and the mission behind it.
is that
So
the ladies in lending?
just
Is that
wanted
the
to give a
ladies?
plug there.
Yeah.
Is that the ladies in lending podcast?
Yes.
Yeah.
Yes.
And Sue's been doing this walk, like she's been walking just this is part of her personal journey. And I think when it comes to some things, well, it comes to everything in our business, authenticity is a competitive advantage.
Yes.
And she's just leaning right into that. So we're so proud of you, Sue.
That's huge.
Yes.
Great job, Sue.
and
Hey, and you know,
and they're paying attention because yesterday I had a closing, and the realtor yesterday said, Sue, I've been following you, and it's encouraged me to get out and exercise. So
So is that Is that Frank walking
That's-
around? Is that,
I saw that. What's up, Frankie?
I recognize that. That's Tijuana in the background. I've been there. He's in Tijuana this morning. So,
Hey, what's going on, man? No, I'm in Cannery Row. This is downtown Cannery Row, Monterey, and just really close to the hotel. The ocean's over on my right, and I'm just heading to Starbucks to get a little coffee going.
Well, I tell you, it's got some big shoes over here we're trying to fill for you, man. So
Yeah, clown shoes. Yeah, big clown shoes. Yeah.
I love it, man.
Look at Frank. Look at Frank starting his coffee appointments at 5:30 a.m.
man.
Go,
On
brother.
vacation too, Owen. On vacation. I never stop, my friend.
Absolutely crushing it.
If you're getting value from this already, go ahead and tap that like button. It helps more loan officers find content that actually makes a difference. And hey, if staying ahead of the market and learning what's really working in our industry matters to you, hit that subscribe button and ring that bell so you don't miss another episode. We read every comment, so drop your thoughts down below. We'd love to hear from you and know what's working or what you'd like us to cover next. Thanks for tuning in, and we'll catch you here next time.
Love
Hey,
it.
well, listen, great. Thank you for sharing all of the wins. So many great wins here. Let me just do one thing, and then Owen, we're going to hand it over to you. Tomorrow, I'm doing a master class, and I'm going to do a live master class tomorrow, and it's called "How to Add 8 Loans in 90 Days Without Cold Calling or Buying Leads." And it's really a no fluff. It's what's working right now for loan officers in today's market. And what we're going to be talking about is the exact formula that's helping loan officers move from 5 to 12 units a month, and how to do it fast, how to activate your database, stop chasing and start closing, and why lead generation isn't your issue. It's really lead activation. I think that's the missing link. And so it's about building a predictable income. And so, Jen, drop it in. New MMA Masterclass. It's going to be tomorrow at 12 p.m. Eastern. It's absolutely free. Sign up and get registered. Jen's going to drop a link in the chat, and we'll see you there on the Masterclass. So, Carl. All right, my man. Owen, let's see here. What you got for us today, brother?
Good morning. Good morning. Well, I'm just sitting here and looking at all the victories. So congratulations to all of you. Sue, getting up and moving is something I need to do too. So I'm sorry, I don't know what city you're in, but maybe I need to come for a walk and talk. That could be something that I need to do on my agenda. But anyway, so I didn't know if everybody on the call has been patronizing their local chiropractor, because I think I have, because my neck is so whipsawed because of what's happening with interest rates over the past 2 or 3 weeks. It's really, really crazy. If you kind of throw up that first chart, Jen, we're on our way back. If you guys remember, about 6 weeks ago now, 4 weeks ago, we hit the high water mark. We were there for all of 3 days, Wednesday and a Thursday towards the end of March. And then we tumbled 300 basis points. And so we're just looking at this. This is a 10-day look back at a 5.5 UMBS chart. So 5.5 coupon. So everything from really 5s to 6.5s go in this bucket. And you can pay more to get some others in there. But if you really look at this, there's still a ton of volatility. And these moves represent about 140 basis points. You know, we were going up in the late teens, right around tax day and a few days after. And then we tumbled. That one day we tumbled about 60 basis points when Donald Trump let loose on Truth Social that he may want to fire Jerome Powell. And it's not so much that the market is in love with Jerome Powell, but the market hates the idea that a president could fire a Federal Reserve chair because he doesn't like doing what he's doing with interest rates. The market hates that politics seep into what they want to be a functioning market it just would throw one more wild card in there about how to read the market. The market doesn't like that. Markets love certainty. That's what they love the most. So that caused the market to spike there. You know, when it went from 99 down to about 98.2, that's an 80 basis point drop with Trump. And then it came right back because the very next day by noon, he said he was not considering firing Jerome Powell. So the market's come back. It's come back nicely. We have the ADP, or the private sector unemployment report, comes out Wednesday. The big non-farm payroll report and the unemployment number comes out on Friday, May the 2nd this month. So that's usually a big market mover. How much it's going to move the market with all this tariff stuff, I really don't know. You know, back in the beginning of April, we got a number that was much bigger than we thought, and it didn't really phase the market much at all because the market is all about tariffs. And is there going to be certainty, or is there not going to be certainty right now? So we'll see. Normally, this would be a big market mover this Friday. I don't know. I really don't know. Can we go to one more slide, Jen? This is just pulls out for a more 30-day view so you can even see more of the volatility. You see we hit our high water mark on about April the 2nd, and then we hit our low water mark, a full 300 basis point in price, not in rate, in price slide. And then when we got the tariff pause, that's when we started to make our way back. So we're about 60% of the way back. So what does this tell us? I think what this tells us is exactly what we've been preaching for the past 4 to 6 weeks. Nobody knows until the tariff thing is settled. I hear there's going to be a political style rally in my home state of Michigan tonight, where he's supposed to walk back some automobile tariffs. I think the market will like that. Maybe with a weak employment report on Friday, we gain some more back to where we were. But this is the train that we're on right now. And so, again, what have we talked about? What did Carl and I talk about on the State of the Union? This is not a marathon. This is a series of sprints. And you got to consistently have your feet in the starting block, because you don't know, is 60% of the way back? Are we going to go all the way back? Or are we going to slide from here? I have no idea. And all the traditional things that you would look at, the direction of inflation, the direction of employment, the direction of the unemployment number, how the Fed is going to traditionally react to those. I don't know. The Federal Reserve, the Minneapolis Fed governor spoke 2-3 days ago, and she said we're data dependent, which I understand why they're doing that. But by definition, when the data comes out, it's late. You know, the U.S. economy is like a cruise ship. It doesn't turn like a speedboat. So, you know, it's an RV. It's not a Corvette. And so, by definition, they're saying they're going to be late, but I understand why they're doing it. So, keep prospecting, lock your loans. It's things are looking a hell of a lot better right now than they were 2.5 weeks ago on April the 12th. They're not looking quite as good as they were on April 4th. So hopefully we finish April and go into a time of some consistency. But again, no, I don't think this administration is built for consistency until maybe we get past the tax bill. So we'll see. Anyway, I wanted to kind of switch gears for a minute and talk a little bit about something I haven't talked in a while, which is what in the heck is going on at the CFPB. It has just been chaos, and chaos. If you are a follower of this, you'll remember that both Bill Pulte and Jonathan McKernan, who's the CFPB director nominee, had their hearing on the same day their congressional hearing. They were both reported with a thumbs up out of the Senate Banking Committee on party line votes shortly thereafter. Bill Pulte was rushed to confirmation. Probably about 2 weeks later, he was confirmed, and Jonathan McKernan has just been in the wind. And what is happening over there right now is a court fight and an employee fight. So there's a judge that is has this case about, is it legal what the Trump administration is trying to do to the CFPB? And it is a nasty, nasty fight. So CFPB had around 3,000 employees at their high water mark, maybe a few more. They got rid of the temporary employees. They got down to 1,700. Basically, what the judge is hearing and opining on is Congress created the CFPB, only Congress can shut it down. How many employees they're cutting? Can it still do its core function? Are they circumventing the law by cutting too many employees? I'm a lawyer myself by trade. I'm generally pro courtroom, but I have no idea how a judge is empowered to make that decision. I think it's politics run amok, but look at what is happening. So the Consumer Financial Protection Bureau is they're trying to push a 90% or more cut of the staff. This has been reported by several news outlets. Jonathan McKernan may take over the smallest bureau in Washington, D.C., when he is likely to be eventually affirmed by a straight party line vote in the Congress. They think sometime in May. Mark Paletta, who's the chief legal officer over there, is technically Russ Vaught, the OMB, Office of Management and Budget Chair, is the director right now. But basically, Mark Paletta is running it on a day-to-day basis. He's the chief legal officer. He testified saying job cuts would right-size a department bogged down by vast waste. Now, if you remember, the CFPB was the tip of the spear, along with the Department of Justice, just even 6 months ago. In the Department of Justice, long announced but not much results, war on unfair lending and redlining. They came up with a very creative definition of redlining, one not seen in the law before. And they're really trying to shut down that thought process. So Russell Vaught, you can see here, the Office of Budget Director, saying that the regulator has gone woke and weaponized and needs to get into line. Jen, if you could advance this for 1 second. Okay, the New York Times report adds that the court records show that employees warned their bosses that they're trying to fire so many workers they would ruin the agency's ability to function. That is the argument right there, that they wouldn't, their systems would break down, the attorneys would miss court deadlines, and the cases would essentially vanish. But Trump is continuing to push this to proceed. So where does this leave us? This does not leave us in an area of no enforcement. This is not the CFPB going away. Remember, the rules survive. So what the industry really needs, what the MBA is pushing for, what a lot of housing groups are pushing for, is for the rule makers to come back and change the rules. Because if we had a gutted CFPB that admittedly does not do much, if any, enforcement for the next 3.5 years, in the next 3.5 years, if the election goes the other way, and 7.5 years if the election goes the other way, whatever, they will come back, and the statute of limitations on most of those rules are 5 years or potentially more. Record keeping 5 years or more. They can go after you for sins committed, or their definition of sins, which is much different than the current crowd's definition of sins. They can go after you after the fact. And so it really leaves the industry in a poor place with rules that are not enforced but are still legal. And it's just it's a mess right now. And so hopefully some of those 200 to 400 employees that may survive are ones that are going to change their rules. I heard an incidental story from a friend of mine in Washington, D.C., that the lawyers at the CFPB are literally sent to their office, given nothing to do, and once a week someone will come in and ask them to Google something or something like that. So these folks are being paid to do not a whole lot right now while this court fight happens. So I think that's why they're delaying Jonathan McKernan. I think he's going to get to the finish line sometime in May, but we will see. We will see. I think I have one more slide, Jen. Just one more headline here. Yeah, May confirmation vote for Jonathan McKernan. So we'll see about that. We'll see. But it's an interesting time in Washington, D.C., no doubt. So anyway, it's a carnival for sure. It's a carnival in the rate world, and it's a carnival in Washington, D.C.
Wow.
So anyway.
And Steve, there was one more slide he did not include that he sent me.
Oh yeah.
That he's well connected. Owen's well connected in DC, and I took the watermark off of the source that he got this.
Okay.
But evidently there is some breaking news, and Owen, we're all a little bit shocked about this new discovery, and we just wish the happy couple. Yeah, I'm just kidding. So it was just a bad idea of a joke. A bad idea of a joke.
It is the season of miracles, right?
It is a season
of miracles.
So what does all this mean, Owen? Is this just more of the where you're talking about I tell you the one thing that's just ringing in my ear a lot is this idea, and I know you've said it a couple of times here. This is not a sprint; it's a marathon.
Yeah.
But it's going to be mini sprints, and that we got to stay ready. That in these ups and downs, that we have to be ready to strike when the iron's hot. We need to hit then, and you cannot wait until it gets hot to turn it on, because by the time you turn it on, it warms up.
Yeah, it is.
It's over again already.
Yeah.
Yeah, it's we had, like I said, we were at the low rate, and Jen can definitely put those slides in the chat room. We were at the low rate last time for I think 3 days, and then the market moved 150 basis points. I mean, this is not, you're calling, you get a good rate, you call up your person and you say it's 6 1/4, and then you call up at 6 3/8. You're with these 150 basis points moved, you're going from 6 1/4 to 6 3/4. I mean, these are big moves. These are moves where people qualify or they don't qualify. And this isn't just people bringing an extra 18 basis points and discount points to the closing table. So you've got to be prepared. You've got to lock your loans. Like I said, nobody knows the tweet about the tweet storm about Jerome Powell, which caused the market to move 150 basis points for 4 days. Who knows when that's going to happen?
Yeah.
And that's not a political statement. That's just life right now. And so you gotta bring it every single day to your prospecting and lock your loans. That's
so Owen, what does this sound like?
Go ahead.
And Sarah, I see Sarah's got her hand raised, but what does that conversation sound like? Like when I'm talking to my borrowers, and with rates going up and down and up and down, like what's a 30-second version of that conversation sound like?
I'm sorry, you cut out for 1 sec. One more time.
Yeah. So with rates being up and down and up and down, what does that conversation sound like when I'm talking with my borrowers? And they've got a house picked out, and we're closing in 30 days, and we're getting ready to click the button to lock or float. What's a 30-second version of that conversation?
Mr. and Mrs. Borrower, we're in an unprecedented time of interest rate movement. Your interest rate, oftentimes, the interest rates that I get could change 2 or 3 times in one day. Would be a usual day right now with what's going on with tariffs, with what's going on with the stock market. Ours move as much as possible. My recommendation to you would be, we have a rate and we have a fee schedule that will get you to the closing table. I think we do this right now. If things change drastically, it's possible I could get you something a little bit lower, but things could change drastically in the other direction, and then you will be locked in. And remember, I have a program where I monitor your rate, and if we can refinance in 9 or 10 or 11 months, then I will do so for you, because the rate is temporary, but the house is permanent.
Yeah, I like that. I had a common thing that I would tell them too is it obviously depending on how much the rate swings back and forth. But I'd tell them, hey, look, don't let $50 a month tell you where you live and when you live there. You know, that we've all put ourselves in a position that $50 doesn't dictate, you know, where I live and when I live there. And so I'd caution you to let's keep a look at the big picture here and focus on getting you and your family in that house. I can't wait to have you guys see that picture of you guys, you know, playing out at the pool and certain things. So,
and I love that one because it ties the money to an emotion.
Right.
Don't let $50 determine where you live.
Yeah.
But for all 434 people on this call right now, the one thing I would say is you've got to have a 90-second elevator pitch that's comfortable for you to handle that conversation, because I just think letting it float is dangerous right now. You know, up or down, even if it floats in your favor. That's a happy occasion, but you know, you've got to warn them about the large swings in the market. It's absolutely unprecedented.
Yeah, I always find that if we float and rates go down, they're on a scale of 1 to 10, they're happy 4, maybe 5. If we float and rates go up, they're pissed off at like a solid 10.
Oh, for sure.
And
for sure.
And the gain of a 4 is not worth the risk of the 10. Miss Cox, oh, great one.
Good morning. I just wanted to comment about what really the elevator pitch that Owen gave, and then just right now that you gave, Carl, because I think that that's really what's been helping me thrive with the relationships that I've had with my partners and my clients. And the biggest piece of all of this is just asking the right questions. What are you waiting for? You know, tell me what. I had a client, we got him pre-approved TBD underwrite yesterday. It was a hard deal, and we had to make sure we could get it done. And we did. And I gave him what I thought was the happy news. And then he told me he's going to wait another year. And that's when I asked, well, tell me what you're waiting for. What do you think is going to happen in a year? And I think that once we have these conversations with our clients, the information, Owen, that you give is just brilliant. I'm just so thankful that we have you every week, just about. And it's nice for us to have this information, but I think what clients need to hear from us is that reassurance that we're putting them in the right program and product. We're helping them fulfill their family's goals and dreams and objectives to get across the finish line of homeownership.
Yeah.
And if it's about affordability, if it's about payment, dispel the myths with numbers. I mean, the math is always what makes the difference. Like you said, Carl, like that's huge. Like don't let $50 impact the difference. I usually say, you know what, that's dinner for 2 at Chili's. All right. Like you're hitting up a Chili's too with that skillet queso and a margarita, and there's your $50. Like that's typically what happens, is that people just don't look at it in terms of numbers. An eighth of a percentage to one person seriously think that it's going to make a $500 difference on their mortgage payment. But it's not. So anyhow, I just wanted to encourage everyone. Again, I've been extremely busy, thankfully, over the last 2 months, and the conversation on rate hasn't necessarily come up. The range
I want to give a clarification. You haven't been busy. You have been effective.
Yes.
You have been effective.
Yeah.
So,
and I love that too, Sarah, because, you know, people focus on rate, but forget about the appreciation and the cost of waiting. You know, waiting a year will actually cost them more than buying now. And then if the markets get to a place to refi, you can refi later. So good stuff. Hey, and I know we're coming to the top of the hour. You know, one of the things I was listening when Owen, you were talking, and Carl really brought to my, like what I kept thinking of, you said things like uncertainty and the wild swings up and down. And those are the things that we can't control. But I was thinking about, you know, what we can control are the activities, and be real cautious. I was talking to a loan officer yesterday. 30 days ago, she priced out a loan, and the client said, hey, let's float. They locked it in yesterday. 30 days later, The rate was exactly the same. The cost was actually a quarter difference, and it was slightly better. And it's easy when you're in the trenches. It's like up and down, and it's this heightened emotions, and oh my gosh, the sky's falling. But I want to encourage you. That's why we have a process to prospecting. The only way to get out of the ups and downs and the emotional roller coaster is creating a predictable income, which is doing the right activity. So here's what's great. If you don't want to be on the ups and downs, then the thing you control is, what activity are we doing today? Are we having our 13 conversations? Are we asking for the business 13 times? Because even though the markets are up and down, that activity is what gets you off of a roller coaster. And so, and I'm just encouraged, if you're today, we got 400 people. For those of you who don't have a plan, don't have a process, and you say, man, what if I knew what to do, I would do it. Jen, drop in the chat, the dailysuccessplan.com. Meet with our team. Let us help you build your 90-day fast action plan. Because what if you could get off the roller coaster? What if the emotional up and downs could be lessened? What if getting out of the chaos would really help you build something that's significant? And so go to free dailysuccessplan.com. Book in. I think Kristen has a couple of slots, and our team members would love to walk you through how what your next 90 days looks like, and what are the actions that are helping loan officers like Sarah and so many others here have great success by building a predictable income. So,
Hey, Steve, can I just add something real quick?
Yeah, do it.
That totally ties into what Meg and I are going to talk about today for the members on Dialed In with Meg and Jen. We're talking habits that run your day.
Yeah.
And how to stay organized.
Great topic. Great topic.
Yeah.
That is great. Carl, you got anything to add?
Hey,
Closing
before
thoughts?
we go, I got to add one thing. Everyone's got to put some clapping hands in the chat box for Sarah. In 48 hours or in 72 hours, she gets sworn in as the chair of the Fort Worth Mortgage Bankers Association, which is a huge accomplishment.
Yeah.
And she's fantastic, and her advocacy is fantastic. And giving back to the industry at the local level like that is phenomenal. I have all the admiration in the world for what you're doing. And congratulations to one of our own. That's a huge accomplishment. Way to go, Sarah.
I appreciate it. I appreciate you setting an example and leading the way. And I love seeing Vince on the call today. It warms my heart to see you, Vince. Anyway, but thank you. Thank you so much.
And she's kicking butt on closing double-digit loans. So
yeah,
good for you, Sarah. Hey, can I do an ethical bribe?
No.
Okay.
Yes,
I'll do it tomorrow.
No, do it. I'm just kidding.
Okay. Hey, so this is an ethical bribe.
All right.
So I just found out, like literally yesterday, I texted Diane and I said, we ought to put the Breakfast Club as a podcast. And she goes, well, that's a great suggestion, Carl. We started it about 2 weeks ago. Did not know that. So the Loan Officer Breakfast Club, you can now re-listen to episodes. I encourage you to attend live so you can see the graphs and whatnot, and get snapshots of scripts and things that we do. And you don't get to see what's in the messages. A lot of magic happens in the messages. But if you want to re-listen to it, or if you missed one last week and you don't want to sit in your office and watch it, you just want to listen while you're walking around the neighborhood or something like that. You can now, on whatever platform you listen to, it's on Loan Officer Breakfast Club.
That's a great idea. I'm glad I came up with that.
Yeah, well, I thought it was a great idea too. So it's going to be released daily, but I need a favor. So I'm going to give you an ethical bribe.
Let's do it.
If you'll listen to an episode and give an honest review of it, which, I mean, you're here, you know what they are, right? But if you leave a review, that helps us in the rankings, in the algorithms where they show it to more loan officers. The more loan officers see it, the more ideas that we get, the more ideas we can share with you guys. If you'll go review it and then just take a little snapshot or screenshot or something of your review and you email it to us, I'll give you a copy of my newest book that I did. It'll be digital. And it's the ultimate, I think the ultimate loan officer, the ultimate borrower's objection handbook, something like that. Anyway, it's just a collection of hey, but my rate's too high, and can you close faster? And well, what about this? All the objections that borrowers come up with. I think it was like 105 different objections they come up with. That myself and Steve and Chris and the whole gang, just bounce ideas back and forth, and we put together some objections, and I'll give that to you if you'll just leave a review, just an honest one. I obviously we like the 5 stars, but just an honest review. So that's my ethical bribe for the day is go on whatever platform, Loan Officer Breakfast Club podcast, and leave a review to help us with the algorithms. And so it's on any platform. Just search Loan Officer Breakfast Club. Again, take a picture of your review, send it to us at support@themarketinganimals.com, and we'll send you a copy of my book. You have to give me like about a day to get this book over to the team so they can email it to you. But if you do that, I'd sure appreciate it. Help us out. So thanks.
Love
it. Good stuff, Owen. And on the exit page when you leave, be sure to sign up for Steve's class. I'm really looking forward to that myself, Steve. So good stuff, man.
It's going to be great. Hey, and listen, tomorrow we got Model Match. So I think it's Tom. Is that right, Jen? With
That's
Model
right.
Match is going to be with us tomorrow.
Great service.
So make sure to join us tomorrow for the Loan Officer Breakfast Club. All right, everybody, let's get after it.
Have a great day, everybody. No music? Steve, what's up? Where's our music?
I'm playing it. You can't hear it. Oh,
No.
what?
You know
Jen,
what? I never checked
Somebody
it.
took
Start
my
singing,
good
Jen.
lyrics.
Well, see, it's
Oh, there we go.
music is
Oh,
trademark.
And I'm like talking to the music. No wonder it's weird. I'm like,
Well, we saw you. We saw you dancing. We just thought you was on the spectrum or something.
No.
He didn't like.
no, somebody took my
He's
cheering.
dancing to his own tune. Attaboy.
That's it. All right, everybody. See ya.
Have a great day,